This is Rick Cortez. I'm co-CEO of Broadmark Asset Management, and this is the August 2023 update on the Westwood Broadmark Tactical Growth Strategy. And today, I want to highlight the conflict that we're seeing between the fundamentals and momentum. So let's start with the fundamentals. The first pillar of our process is valuations, and equity valuations are high. The median PE on the S&P 500 is now 26.2 times earnings, which is almost 50% above the 17.6 times earnings, which is the 59-year average. So valuations are high. Number two is monetary policy and credit conditions. And here, the Fed raised rates in July. They may pause for a month or two or longer. But in our opinion, it's going to be tough to get inflation down to 2%. So rates may stay a little bit higher for a little bit longer. And when you combine this with the inverted yield curve, we still have to say monetary policy and credit conditions are negative. Number three is investor sentiment. And here, investor sentiment has gotten far more optimistic than it has been all year. In fact, it's in solidly negative territory. For instance, the AAII poll, that's the American Association of Individual Investors, which is the retail investor, is now very, very bullish on the market, more so than in the last year. So we've got the fundamentals bearish or negative, but the market continues up. And not only does it continue up, but it's broadening. So we've got a conflict. How do we resolve this conflict? Well, we always go with momentum. Why? Because we don't predict stock prices, we adapt to the market. We never want to be on the wrong side of the market, and our watchword is don't fight the tape. In June, we increased our allocation in separately managed accounts to 50% to large cap stocks. And last month, in July, we rebalanced the portfolio towards equal weighted S&P stocks. And as an example, in July, the Russell 2000 was up 6.1%, which was better than the other averages. So we are seeing the market broaden. How high would we take our allocation to equities? Not much higher than we are now, unless the fundamentals changed. We could raise it moderately, but we are right now near the limit of where we can have our equity allocations and exposure unless the fundamentals changed. I want to make one final point, and that is that the market is now up 20% from last year's low. If we look at stock market history, we find that when that happens, the market often does not stop there, but continues upwards or stays up for another 3 to 5 months, possibly another 5 to 10%. So we would not at all be surprised for the market to continue up. And frankly, whether you have a 50% or 100% allocation to the market, we're all having profits here. And that's always a good thing for all of us. But we have to remind our clients that we are risk managers. The fundamental risks are high. So we could see a choppy market, more volatile market in coming months. And in our opinion, flexibility is going to be the watchword for the next few months. So this is Rick Cortez. Thank you very much for joining me. I hope you have a wonderful rest of the summer. And I hope you join us in September for the next market update. Thank you very much.